Hey, welcome everybody to the episode today. We have a great episode. We actually have no knots on our hot or not list today. We're going to cover three hots. And that's only because the market has just been sharing a lot of stories. There's a lot to talk about here. This week with the traditional markets, we had a panic sell-off on Monday, and that correlated into the cryptocurrency markets soon after. So, let's see where the price action's been taking us. Let's head definitely straight over to the big board of BTC. CJ Monty, our analyst, coming out of Chicago here with MarketRebellion.com. My co-host Ryan, who I now introduced with the best hair in crypto because it just is. But CJ and Monty, what do we got going on the BTC charts this week?
Yeah, this is going to be a fun one because there's been a lot of very interesting price action. I just want to start out with the S&P and the Dow just because of that, such strong correlation and how it always seems to flow into the crypto market. And so like with Bitcoin, we saw a pretty drastic sell-off, not only in Bitcoin, but in the S&P and the altcoin market. So this is just a weekly perspective. And you can see that we both topped on green nines on the S&P and in the Dow just 3 weeks back. And while I am bullish over the altcoin space and in Bitcoin in the interim, the only reason why I am skeptical and cautious for a bear trend is because in the S&P and in the Dow, we are now have had 3 weeks of consecutive negative price action. And we have not had that since we bottomed in March. So that's just something to keep an eye on, something I'm just a little bit cautious about. Nevertheless, let's get on to Bitcoin and crypto. So starting with BTC here, last week we talked a lot about how we had rode this nice green wave of momentum all the way up, topped on the green 9, similar to the S&P on the weekly. Then we were hitting harsh resistance at 11,000 and 11,200. I remember last week Monty said he entered a short. I think it was maybe on this 8 or on this 9, but that one worked out pretty well, it looks like. And
he's loving the shorts, by the way. I mean, he's going to start getting his own nickname.
Especially to do it in a bull market like that when we're making higher lows. Yeah, it's
bold.
Yeah, it is bold.
Yeah, well, I mean, all the signals were there. I mean, I obviously didn't see that massive sell-off in the S&P coming, which I think is a lot of what drove this price action of Bitcoin. But luckily, I was able to exit that trade. I was expecting a bounce back, but I was actually kind of surprised by the speed at which Bitcoin bounced back from this sharp sell-off. It seemed like it really bounced back quickly and quicker than other assets as well. So.
Yeah, I know we had a few comments in the comment section from last week's episode, praising both Matt and CJ for their TA, because I think someone actually mentioned that they followed Monty down that short position rabbit hole. So, and it worked out for them.
That's a dangerous move. If you're feeling bold and you feel like following me, go for it. Props to you.
And noticed, and that other people have noticed as well, when Bitcoin sells off in tandem with traditional markets, it's initially just a panic liquidation as traders go risk off to cash. There is a significant risk of an extended bear market, as you mentioned, with equities markets. But in these instances, Bitcoin tends to pair off and slowly recover, and that correlation dies. Do you see that happening in this instance?
Yeah, I think so. I think we already kind of see that happening. I mean, like I mentioned on that 5 candle that CJ's got highlighted right now.
Yeah.
I mean, that was a bounce back that kind of wasn't paralleled in any other asset. And I think that was already, there's been lots of talk about how Bitcoin is uncoupling from gold. And I think as the traditional markets like the S&P and the Dow start to enter this extended period of a bear market, we might see more uncoupling with Bitcoin. I think during periods of sharp sell-offs and steep buys, I think we'll always kind of see a sort of correlation where Bitcoin is also hits a sharp sell-off. But I think in the long term, if the S&P continues a downtrend, I think we'll slowly start to see Bitcoin uncoupling and Eventually that will happen with a large break when Bitcoin does enter its bull run. But I think, yeah, for the time being, I think for the short term they'll be kind of somewhat similar, but I think eventually Bitcoin's gonna start moving up in an uptrend, and the S&P will continue in its downtrend.
And regarding the Bitcoin pricing that's been going on, today huge expiry day on options both in Bitcoin and Ethereum. So depending on where the price kind of lays, there's going to be some added volatility to the Bitcoin market. If the price, a lot of those options, I believe the majority of those options were priced from the 11.4 to 12,000 range. If Bitcoin had fallen in the money on that side, I think we would have seen a huge, crazy, volatile market happen. But now that since the prices are falling below the options, I think we're going to have less of a distraction in the market when it comes to those expiries happening. All right, and Ethereum, are we seeing anything change drastically with Ethereum? Is this just, is it still going along its DeFi route as far as, its use in projects, or is it beginning to follow and fall in line with Bitcoin as well now?
Yeah, I would say it is kind of similar to Bitcoin in the sense that we didn't get to a green 9, but we still were rejected at the 50 period moving average, which was the same resistance level that rejected Bitcoin on the recent downturn. And it's very nice to see that we're making a green bullish hammer candle after kind of this 1 to 4 candle correction. I'm going to be looking for a green 2 and possibly a green 3. I am bullish neutral with this higher low off the 128 period moving average. The reality is that while these interim dips can incite fear, this is a bull market. DeFi is not going away in the interim. There is still hype. There's still people in this space, and there's money to be made.
Okay, very good. Well, let's go to our triple hot list now. Again, I mean, there's so much upward momentum happening in various coins that we just couldn't honestly hit a knot for this week's time period. Everybody was really excited, but the first one we're going to talk about is Cardano, ADA. What's happening there? It's had a huge price action to the upside lately. And I mean, this has always been a darling as well. I mean, for the last couple of months, a lot of people talking about Cardano and how great it is.
Yeah, absolutely. And people have been waiting for me, right? I mean, there was a hard fork on July 29th. So that was a big moment for Monero. And I mean, since then, for Cardano, and since then we've seen, we've kind of seen a consistent downtrend. So the bulls have been waiting for this, this green candle to emerge. And I mean, we've been in this extended period of a bear market, like I said, and it didn't look like it was going to break anytime soon, but the technicals were there. We hit a red 9, and the flip came just a few days later. So, I mean, the reason for this, I mean, this obviously isn't just because of technicals. There's got to be something driving this. And I think this will be really interesting too, not only to see where it goes from here, because 10 cents, I mean, this will be a strong resistance point coming up right here. So whether it breaks above that, and then as CJ points out, there's those moving averages resistance above it as well. So although this is a very bullish candle, there is still lots of bearish resistance. But according to Flipside Crypto, 7.6 billion tokens were transferred to Binance and then subsequently withdrawn. So that was just last month. So I think finally people are buying back in, and that moving average may have been a signal to buy back in. That red 9 may have been a signal to buy back in, or other signals. This may have just been the bottom with traditional equities driving down on that 8 candle, and then people saw that as a sign to enter. So yeah, I mean, this is a big move for Cardano, and people have been waiting a long time for it. So,
and if I could just add one thing before we move on to the next asset, This is a very common theme, seeing these 9 and bouncing off one of these moving averages. It's happening throughout like 10 or 15 of the most prominent altcoins. And I just wrote like a little analysis a couple days ago that highlighted like, I think it was over 12 assets, like Amise Go looks exactly the same as Cardano. Like we're bouncing off the 9, we're hitting the technicals perfectly. And this is happening across a various like myriad of assets, Kyber Network, Raven Coin, Link, Comp, Voyager. And so when you see all of this confluence in the altcoin space, it's just like, it's very promising. And these are the exact type of reactions that that we expect when we reach these 9s across like collective asset classes. So, you know, while we're talking about Cardano, because it's up 16% today, there are many assets that were in a similar boat that are still coming around. Like one good example is UMA that I'll just bring up real quick. Like
UMA, didn't we have that on the not list not just 3 weeks ago or so? And it took off.
I mean, it hasn't necessarily taken off yet, but it's in the same boat as Cardano and many of the altcoins in the sense that it's hit this red 9 and it's just starting to come around and possibly rebound. So just there's some interesting patterns going along like collectively in the altcoin space.
And folks, we'll put a link to CJ's analysis and what he just pointed out in description, so you guys can read the full-length version there over at marketrebellion.com. And one last thing before we do move to the next asset is, hey, guys, I mean, so really the hard point here is going to be the moving average resistance, basically, and there's so many of them that are hitting that point shortly. That we got to be concerned about.
Yeah, no doubt. I mean, not only that, with Bitcoin at 10K as support, and also the moving average right below it, kind of strengthening that point. So yeah, I think these moving averages are going to really kind of tell the tale moving forward.
Okay, very cool. On to the next one. The next one was actually probably the #1 darling that's been happening for the last 2 or 3 months until Uniswap popped onto the radar over at Coinbase. But that's Chainlink, ticker Link. And, you know, Chainlink is just, it's had its upward rise. The technicals have been there. But what are we looking right now? What's happened over the last 7 days? What we can expect over the next 7 days?
What I think is so interesting about Link right now, I mean, like CJ pointed out, it's kind of hitting those same technicals that lots of other altcoins are hitting. But what really kind of stood out to me when looking at this asset on CoinMarketCap was the volume that it's seen in the last 24 hours. So it's seen something like $2.5 billion worth of volume in the last 24 hours, which dwarfs most other, 2.47. So it dwarfs most other altcoins in terms of volume, but really it was a kind of a battle between the bears and the bulls, because the price action kind of was stagnant while this battle was going on. And I think we're kind of starting to see a break to the upside and a break above $10. But for the longest time, that volume was happening. And if we look at the candles, there wasn't really too much movement going on with price. I mean, it was kind of in the last couple of hours, it was kind of just battling between the bears and the bulls, but now it's above $10 and it's looking like it might move up, and the next resistance is that moving average above it. So it looks like the bulls may have won this battle.
Yeah. And you know, what's sorry to interrupt CJ, but what is so obvious from this chart that's different from what the common theme seems to be is, you're right. It looks like the bulls have taken it above, you know, at certain resistance levels, and it's headed for an upward swing.
Yeah, agreed. You know, if we get this closing above the previous red 9 setup trend line, as well as this general resistance level at $10, like you see, I mean, there's like a 25% channel to the upside here with, you know, very low resistance. And that's all coming off this massive upswing that we had on August 8th with this green 9. So,
Okay. We're looking at a possible 25% room to grow then on this one.
Yeah, I think there's lots of room to grow here, especially with the lack of resistance above and the amount of volume it's seen in the last 24 hours. Definitely.
All right, very cool. Well, here's one that we haven't covered since we started the show, and that's Theta. And ticker is its name, Theta. This one has seen some pretty provocative upward price action lately as well. And I'm familiar with Theta, and when I started looking at, hey, what's moving this, I definitely wanted to get Monty and CJ involved, see what the technicals look at, and if there's any technical reasoning behind this upswing. And as you can see from the chart here, I mean, it's looking pretty bullish right now.
Yeah, definitely look good, but I would be a bit hesitant to enter a long trade right now, just because of the amount of bullish action that's already happened, and also the fact that this is on a combo 13 on the TD sequential indicator, which is indicated by that D right there. So that can be an indication that the asset is a bit overbought in the short term. But this is a very bullish formation. Just looking at it, it's got the moving averages below. So I think if it does get rejected here on this combo 13, I think that'd be a good test if it retests that moving average like it did a couple weeks ago, and nicely bounces off that again. Then I would definitely be bullish and enter a bullish trade. But I think in the short term, it might retest that moving average. But yeah, I mean, this is still a very good looking chart.
Yeah. I like the concept of buy high, sell higher, especially in crypto. Like, this reminds me kind of the stock market a couple of weeks ago in stocks like Snap or like Pinterest that just kept continually making new highs. And especially like when you're breaking the previous swing high here at like 55 cents, that's just like, it's a bull market. I'm going to follow the trend.
All right, very cool. Well, for our last segment, we have we actually have big news, and I'm excited about this. It involves traditional banks and stable coins. Ryan, what are we looking at here? I mean, this is just more news to do with traditional banks. It seems like it's now coming out at a flurry. Week over week, we're getting new news on traditional banks and crypto. But this is huge, right?
Oh, it's massive. You have the Office of the Currency, one of the U.S. regulators that oversees banking in the country, saying first that you can custody crypto assets a few weeks ago or a couple months ago, and now they're saying that you can hold reserve funds on a one-to-one basis for stablecoin issuers, coupled with another regulatory body here in the U.S., the CFTC, saying that crypto exchanges could potentially be regulated. I think the pendulum has definitely swung in the direction of there being regulatory clarity. And, institutions have always said the one thing holding them back at this point is regulatory clarity, no?
Yeah, absolutely. I think that's always been the gray area, and not only the gray area for exchanges themselves, but concerns for the institutional counterparties.
Right, and once you have institutional adoption, that waterfall of money is finally, at least it's predicted to come into the space. And CJ, Monty, is that what you would expect, and what kind of effect do you think it would have on the markets?
Yeah, no, I completely agree that, I used to be of the opinion that like the SEC was just trying to kind of extend its reach and kind of get away to do all these KYC protocols and also, for the longest time they've been in this upward battle of defining cryptocurrencies as securities or not. And I think this will be a great way of them kind of getting control over that and allowing them to not dictate, but more rigidly define for institutions and investors what exactly is a security and what exactly is not. So yeah, this is big. I think institutions need that gray area that Alex is talking about to kind of be rubbed out before they're completely comfortable entering the space. And I think institutional dollars are key for driving the market up. So yeah, this is big news, and I would definitely be bullish if there's more regulation and more institutions entering the space.
Yeah, I mean, listen, it's much easier for retail folks to participate in markets without regulation. But when it comes to institutions and institutional investors, there needs to be rules, there needs to be accountability set up in order for them to be comfortable as fiduciaries, right? So we can lose our own money playing games, that's one thing, but when an institution comes in and they're managing money for, you know, for regular folks in their IRA and all that stuff, there has to be rules and accountability. You know, listen, Cardano, Chainlink, Theta, the market's looking like, you know, on these three for sure that it might take a pop. We got great news coming out with the banks and the stable coin. So it looks like, you know, hopefully maybe the market starts correlating to legit events that are happening, but we'll see. We'll see next Friday if we were wrong on these three coins having a pop or not. And if so, we'll get CJ to play a guitar song for us. All right, guys. Thank you so much for joining me. And anybody has any questions, you know, drop them in the comment box. Again, CJ's analysis from marketrebellion.com will be in the description, so you can read that full write-up from there. And we'll see you next week, guys.